So also in the 58 letter written in February 1959, Buffett says to his investors, last year I told you, quote, our performance relatively is likely to be better in a bear market than a bull market. That's on a relative basis, by the way. So if the market's down 15, he'd be down 5 or 10. So that deductions made from the above results should be tempered by the fact that it was the type of year when we should have done relatively well. In a year when the general market has had a substantial advance, I would be well satisfied to match the advance of the averages. And the reason he's making that statement is because he's buying businesses with a clear margin of safety. So in down years, the business is already priced for the apocalypse, and anything that good that happens to the business is going to be a huge catalyst, particularly in the case of his workouts and in some of what he calls the general blue chip stocks. However, in the good years where the market rises, it's usually driven by these high-flying stocks. So how can you underperform in the bull market years, which Buffett expects to and does, like we saw him in the late 90s, and slightly outperform in the bear years, and over time dramatically outperform the indices? And the way that that works is because he's never in the super high beta stocks that work exceptionally well in big market years. So a good example is, Tesla of 2 years ago. People just, it was like a moth to a flame. People couldn't get enough. And now, NVIDIA is the new version that people just can't stop chasing, and it can go much higher than anyone thinks. But what Buffett avoided by not chasing the high flyers was when those stocks crack, they come off so dramatically more than the market. They can come down 50% in the blink of an eye, missing one earnings quarter or two earnings quarters, and it's just a rush to the exit. So that's why he's willing to forego in 30% year up markets. Maybe he does 20 or 25, and in 10 or 15% down markets, maybe he does -5. But he never gets caught in getting his head chopped off because he was chasing those stocks which drove a plus 30% market. Good lesson from the master here.